the best of Money Matters.
Market View on Money FM 89.3.
That's right. You're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares rose today, even as investors mount new tariff threats by US President Donald Trump. So if you look at the Straits Times Index, it was up 0.23% at 4,056 points at about 11:30 a.m. Singapore time. And that is with a value turnover of some 490 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. As we shared with you earlier, the STI ended in the green as well, up 0.25% at 4,057 points. In terms of value turnover, we are looking at 1.23 billion Sing dollars. Now, gainers outnumbered losers, 287 versus 187. Top advances for today, we've got for you GMHUSD, Jardine Cycle and Carriage, and UOL. And top decliners, we have SGX, Holpa, and Palmatic Data. Now, in terms of counters to watch, we have OCBC and Great Eastern, because Great Eastern will resume trading after a vote for it to be delisted fell through at its EGM yesterday. Now, elsewhere, from Trump's latest comments to impose this 50% tariff on imported copper to China's producer deflation deepening to its worst level in almost 2 years in June, we've got more international headlines in focus. And joining me in the studio today is Kenneth Goh, Director of Private Wealth Management at UOB Kay Hian. Kenneth, welcome back to the show.
Thank you.
And Kenneth, let's start with the US this time around. I mean, US dollar traded close to a 2.5-week high versus major peers. Copper hit an all-time peak overnight. No surprises there. US President Donald Trump broadening his global trade war, threatening this 50% tariff on copper. There were also talks on incoming levies on semiconductors and pharmaceuticals. We've talked about movements in copper and the USD, but how are equity investors in the US taking in the news?
Well, as of last night, the S&P edged down 0.07%. The Dow fell 0.37%. The Nasdaq was flat at about 0.03% up. I think, generally speaking, markets are holding steady as investors are pricing in the tariff rhetoric and then just waiting for further clarity from there. Generally speaking, many market strategies are suggesting that this is the calm before the storm. So, investors are now looking at the details versus the headline noise.
Okay.
Yeah.
Now, going back to Asia Pacific, where the region is concerned, I understand markets ended mixed. Investors there digesting Trump's trade salvos and shifting positions, would you say? We know for now that Japan and South Korea are among those trading partners that received the letters to pay tariffs on the 1st of August or reach a trade deal. But Trump, even though on social media he said that he will not extend the August 1st deadline, he also sent mixed signals on how flexible that date is. Yes. So how would you read into movements in Asia then?
I would say that right now, even administration officers, right, they also don't have a line of sight in terms of what's going to happen. So, for example, Secretary Bassett, for example, right, they felt that they were making progress on the deals with several trading partners such as India, the European Union, as Trump's previous deadline approach. So what happened, right, was that it was supposed to actually lapse at about 1201 Wednesday. Then President Trump decided to actually make the changes from there, postpone the implementation date for 3 weeks, and then send out the letters warning of the countries of the rates that they will face on that day. So you will definitely see much changes. And I think generally speaking, the market sort of like priced it accordingly from the reaction as of last night.
I see. And, Kenneth, let's talk about the Singapore stock market. How did the STI fare today in relation to its regional peers, and any surprises when it comes down to the biggest movers and, of course, the sectors that they lie in?
Well, for the Singapore market, right, it's been broadly, it was up by about 0.4% based on the data that you shared just now. But generally speaking, you would see that the biggest winners was UOL, CapitaLand, Singapore Airlines. Losers was SGX, OCBC, DBS. Depending on which time of the day that we're looking at the Straits Times Index, right? But generally speaking, more winners than losers. It's a very generally speaking, you don't see any single component surging up significantly or going down a lot as well. Generally speaking, the markets in the Singapore stock market are following the US stock market, which is basically a wait-and-see approach.
So everyone is waiting for the details to be sort of set in stone and waiting for all the flip-flops to sort of die out.
Yes, and indeed, the details will be subjected to change as well.
Okay, so the devils and the details as usual. And zooming in on the counters to watch, Kenneth. Quite interesting, this one between OCBC and Great Eastern, because Great Eastern will now resume trading because the vote for it to be delisted fell through at its EGM yesterday. I know you don't comment on individual firms, but generally speaking, when a company like Great Eastern fails to delist, what happens next?
It's a very interesting story behind this, because this is not the first time this has happened. It's happened the third time since 2004.
Yeah.
So the bank held almost 94% of Great Eastern after the takeover closed in July. However, the ownership level wasn't sufficient for OCBC to actually delist the company directly from there. So what happens, right, is that Great Eastern has been suspended since July 2024 due to its free float floating below the required levels from there. So what happens, right, is that after yesterday's vote, trading will then resume once the company restores the minimum public vote. So it will likely do it through the bonus share issue from there. And this is as a result of the failed acquisition of $30.15 per share of Great Eastern Life, which did not happen from there.
Okay. Now, if you're just tuning in, we're in conversation with Kenneth Goh, Director at Private Wealth Management at UOB Kay Hian. Well, another counter to watch, Kenneth, today is Mapletree Industrial Trust, because Temasek's Mapletree Investments, which is the sponsor of Mapletree Industrial Trust, said in its annual report for the financial year ended March that it is looking to expand and diversify its footprint in 3 of its 4 core sectors of data centers, logistics, and student housing. What do you think, broadly speaking, is the outlook for industrials and data center-focused REITs given opportunities surrounding generative AI?
Well, Mapletree's Industrial Trust own financial report in 2025 emphasizes growth in data centers, logistics, and student housing. Their view is that there is a strong demand and low vacancy in both North America and Asia itself. And, while the valuations are a little bit on the higher side, but it hasn't deterred investors. For example, Blackstone has acquired AirTrop for Australian dollars, $24 billion. So the implied forward earnings multiple is about 20 times. And you will see investors still going for these kind of deals despite the limitations in the power and grid capacity from there as well. In terms of the Singapore's data center REITs in focus, there is also likely to be strong rental gains driven by generative AI demand. So there was a very interesting report by JLL, Jones Lang LaSalle, where they actually stated that data center capacity must grow 15% annually to meet AI needs, likely to be more as well. So that's why you will see quite a strong demand coming up, especially in 2025 onwards. And you can see that AI machine learning models have also increased in quantity and size over the last 5 years as well.
I see. And I do want to take some time with the next 2 questions, Kenneth. Let's go across the region and start with China. China's inflation numbers are out today, and its producer deflation deepened to its worst level in almost 2 years in June, as the economy grappled with uncertainty over that global trade war and subdued demand back at home. So just to bring out some numbers, if we look at the producer price index that fell 3.6% in June from a year ago, worse than the 3.3% decline in May, the largest fall since July 2023. Now, forecast in a Reuters poll was 3.2% slide. So what do you make of the latest numbers, and how have investors reacted to them?
Markets haven't reacted significantly from both Hang Seng, HSCEI, as well as the Shanghai Composite Index. However, while doing research for this particular topic, right, I found a very interesting word. Okay. It's called involution. It's called a destructive price war driven by overproduction. And what this is affecting the PPI significantly from there. Why? Because even policy makers in Beijing, for example, they have publicly criticized local governments over this thing because it results in destructive price war through overproduction from there. And when that happens, right, it's a race to the bottom. It rates profits, stresses business, and it basically doesn't create sustainable businesses from there. And you will see quite a fair bit of it becomes a self-defeating spiral within the existing market itself. So when everybody is like trying to, the lowest price they can ever offer will be zero, and when nobody's going to make money on the price of zero, obviously. So definitely this would definitely have a significant impact on the Chinese PPI as well.
Okay. What do you think is next for Chinese, say, automakers in such an environment?
So it's a function of both demand and supply, right? And obviously, supply is not really
demand is not holding up.
Yes, demand is really not holding up from there. It's a function of obviously job security, income growth, so on and so forth. And as prices start to go down from there, the PPI numbers will likely go down. So hence the market sort of like anticipated that, and you didn't see significant drops in terms of the indexes from there.
I suppose it has to do with the structural long-term problems that China has been facing for the past few years as well.
Yes.
And finally, before I let you go, Kenneth, let's talk about the U.S. Minutes from the U.S. Fed's latest policy meeting are due overnight. What are you expecting on this front? And of course, there are talks of having a shadow Fed president. How would that change the whole narrative?
Well, I think, there was a very interesting article stated that Powell, said that, he would have cut more if not for the tariffs from there, right?
Yeah.
So the thing is, tariffs are obviously inflationary by itself because it increases prices in that sense, right? And what the Fed is trying to see the effects of this these tariffs. So it's expected to show up in inflation in the coming months ahead, because when you increase tariffs, you do not have the impact immediately from there.
Yeah.
It will come month by month, quarter by quarter. And if you were to do a rate cut, and what if the tariff impact is not so significant? So that may be a very inflationary in its nature from there. So that is a very important statement that he shared, which is to be data dependent, not politics driven. So
do you expect that to hold up in the next minutes?
For this current term, likelihood, yes, that would be the case. In fact, the policy will be depend on inflation and jobs data and not political, pressure. That would be the case, because otherwise, their decision making is based on all these things. But it also depends. They also need to have clarity before they can make decisions from there. So everybody will just wait for the data accordingly from there.
Thanks so much for the insights, Kenneth. That was Kenneth Goh, Director of Private Wealth Management at UOB Kay Hian. Thank you so much for joining us on Money FM 89.3.
Thank you very much.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.